All right, guys. Hey, Chuck with Traders War Room. I wanted to give you guys a face behind the bot and the name and stuff like that. And because today was a tough market, guys. And so I wanted you guys to understand that, we're real people out here. This isn't just some algorithm computer-based person. We're real people pushing out, these alerts. And the people that I have on my team are fantastic traders and professional, and it's rough out there. Okay, so I just wanted to give you guys a face to what's going on so that you guys can kind of see and know what's happening out there, and just to give a little bit of more vulnerability and a little bit more intimacy between you and I as participants and members and team members and stuff like that. Okay, so I'm going to go ahead and shut this off now, but I just wanted you guys to hear from me that, hey, the market is rough, but we stand tall, we stand firm, and we stay consistent with our plans and the training that we have so that we can be consistent trading, okay? Because consistency and discipline over time pay the bills. I promise you guys that. I promise you the market will get better, and we'll definitely be able to find the trends. So with that said, let's go ahead and get started. Legal disclaimer, this is not financial advice. The content is for entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. Some services we provide at Traders War Room, free and paid services. And I say again, guys, free and paid services. So you can come over, be a member of Traders War Room, and it costs you nothing to come over there, lurk around, gain some perspective. And when you're ready to make some money, you can go ahead and go onto the premium side where you will find the real-time buy and sell alerts, live trading bell to bell, one-on-one mentoring, trading classes, fantastic community, and just all in all, a one-stop shop that we try to provide for every member of Traders War Room. Right here, Traders War Room, one-on-one mentoring. We're talking about developing skills, gain confidence, receive guidance, refine strategies, get a pro perspective, explore new plans of attack. And if you want to build something or book a session, go ahead and hit us up at traderswarroom.com and we will get you squared away. And everybody who books a one-on-one session gets the recording and a slide deck on what we talk about for their personal toolbox. Upcoming classes and historical classes. We got tons of things on the website, and especially now more than ever, every battle needs a plan. You guys know that we look at the stock market as a war zone, and these are battles we're out here, man. It is rough. So every time you're in a rough battle, you got to get a plan in motion, and we hope you do that with Traders War Room. We got tons of various topics that become a tool for investors and trading strategies to become lethal, guys. So check out our upcoming and the historical classes that we have going on at traderswarroom.com. And like the little box there, these type of markets, self-training is a must, guys. Instant messaging platform. If you're tired of all the dings and pings, and as you can hear, my Discord's going off with a bunch of dings and pings. But if you're overwhelmed with your trading strategy and you just want less noise and just alerts, we got you covered on the Traders War Room instant messaging platform. You can check that out at the website, and it is hot, guys. And it is simple alerts just to make money. Last week's stats, we talked about this the other day. Last week was awesome. 23 trades, 20 total wins, 3 losses, 87% win rate. We had a huge trade on SPY where we ended up pushing over 1,500%, and that was a $1,300 plus per contract. And our highest loss we took last week was 100% loss with NEO at $88 per contract. And these are just mine, guys. We got 25 more real-time analysts and the algorithm bots that we have that are proprietary, we created, and they're fantastic trading things, especially in this market, guys. We got all kinds of styles, stocks, option, crypto, forex, long, short, day swing, spread, leaps, you name it, something for everybody. And that is what we're talking about. Everybody, every style, every budget, and we challenge you to come get some. Some exciting promotions we got going on. We got a 5-day trial of the premium gold membership. You come over to Traders War Room, activate your gold membership, and you can get a 5-day trial to check out all the alerts and all of the real-time AI bots that we have going on. And hopefully you like what you see and you stay a member, but if not, you go back to being a free member, and it's all good either way, man. We just want to promote our platform and hope you guys enjoy it, and hope you guys stay on as premium members so that we can make this money and be a team together. We also got an upcoming class on 19 June at 12 p.m. Central Standard Time, how to trade the strat. Guys, we want you to take out the emotions of trading for greater consistent gains. We're going to teach you what the strat trading strategy is, how to identify using the trading bars, and at $15 a pop for a formal professional class, and you get to keep the recording. It's a fantastic deal, guys. And it is on the website, so go ahead, purchase and register your seat today. Next class we got how to use margin for consistent income. I get DMs all the time about this margin thing, man. There's people upside down on their margin, okay? We got a professional coming in here who's been doing margin for years. He's made a fortune. He's going to teach you guys the secrets on how to leverage your margin, what margin is, how to effectively use the leverage your trades, and how to use it to generate consistent income. Guys, this is important, especially in this market right now, so that people don't end up going upside down on their trades. And again, this is on 26 June at 1 p.m. Central Standard Time, $15. You keep the recording and we got you covered, guys, right there. And it is on the website, ready for purchase. Bottom line, we're destroying the market no matter which direction it goes. We want you to quit wasting that money that doesn't make money. We hope you do that with Traders War Room, because we want you to invest in yourself. And guys, as always, if you're ready for war, we are as well, and we're ready to take you there. So let's go ahead and get into it and go destroy the market. Put those tickers that you want to see in the chat group right now, and let's go ahead and get it. I got a short promo to get you excited, and we're going to get this done and then be on our way with the trading. And if you're not excited after hearing that awesome music and feeling the vibe, man, I don't know what type of trader you are, because I'm ready to go ahead and get out here and crush it. Guys, we are going to start with SPY, okay? And always, consistency pays the bills, guys. We're starting with the bird's eye view approach first and looking at the day chart. And as you can see, of course, we went down. Yesterday, we had a nice relief rally. Then basically the reality of what we're currently in with inflation and the global market as a whole went ahead and pushed us down further. And guys, as you know, a lot of people started buying into this, thinking that we were going to come back up and potentially get this gap. And I thought that too, but of course we came back down and we had to be prepared there. So puts were definitely the winner, and those calls, I hope you guys take the advice and push out 2 to 4 weeks at the money, in the money, because that's what's paying the bills. Now, let's go ahead and look at the 5-minute though and see if there was opportunities where we could have made money both ways on SPY. And there always is a bull market somewhere. It's just our job to find it. So off the get, we knew in pre-market we were going to push lower because our moving averages for momentum crossed and we pushed to the downside. Guys, we were below our moving average, moving all the way down until about, I would say about 11, 10, 11:30, guys. And then we started pushing above the moving averages, which was a good indication that we could potentially make some trades. Now, puts definitely king here, because you're able to make more dramatic movement here at 370, pushing down all the way to like 366. Nice little $4 or $5 movement there. And then we could have made some monies on some calls, paying attention to the crossing right here. We get a cross to the upside. Could have made some money, a little 367, pushing up 368, a little lunch money change. And then we can play it back down to the downside for the puts, guys. So that's how we make money going both ways on the stocks. Now, let's go ahead and get into the stocks that you guys want to cover. Just wanted to give you a little perspective on that SPY. Here we go. We got Tesla, Apple, man. Thank you, Robert, for putting those. Those are the ones that everyone's talking about. Let's talk about Tesla real quick. Let's look at Tesla. All right, Tesla on the day chart. Now, Tesla got some news that kind of gave it some bearish sentiment, guys. Okay, if you guys weren't listening to that news, it definitely came out and it could potentially put a hurting on some Tesla trades. So we're watching this very closely, but we weren't able to hold this line up here where we closed that yesterday, okay? And that was a big indicator for the downward trend that we saw here. And Tesla holds a lot of weight. Also, Apple does as well, and some of these other ones. So that's one of the main reasons why you saw a lot of the SPY trades going, because people got all overzealous on this particular trade here, and we pushed to the downside. All right. So definitely Tesla saw some downside, and we talked about this level here the other day. We were probably pushing down to the 620s, and look at that right there on the day. We wicked down all the way to 620. We talked about that yesterday. Definitely it happened, and we saw it. So congrats to people that got in puts, and I hope you guys who were in calls pushed out a little bit further on the trade. Now, Tesla's another one I like to show on a 5-minute chart, because where there's pockets of potential in Tesla, a lot of people like to trade in. Tesla is one of those great trades that you can make money both ways over and over again. So we knew it was coming down. It crossed. Moving averages are down. This would have been a great entry to go ahead and get into puts. 656. We saw the consolidation down here. 655. Definitely able to make some money there. And then we could have reversed this back and pushed it up to the upside. Pushing here at about 662. So you're able to make money both ways. You saw this pattern repeat itself. It spiked back down, consolidated, came back up, spiked down, consolidated. This would not have been a good area to get into. I think this is lunchtime slump area. But here you go. Puts down. We got closing below the moving average. Starts to get closer. We're out writing calls up in the bell, and we even closed above our moving averages. So hopefully we get a little bit of relief rally tomorrow. That's what I like to see, closing above the moving averages. So we'll see what pre-market brings us tomorrow and how the sentiment is early at the bell. All right, let's go ahead and go on to the next one, Apple. And a lot of these charts are going to look very, very similar, okay, on the day. All right, again, very similar to those other charts that we're looking at. Why? Because these hold the majority of the market cap space in SPY. So they look like SPY, they react like SPY, and they're going to look like each other for the most part, unless something's crazy pushing it as a catalyst. But definitely Apple coming down lower. We have some levels here that we're paying attention to. I got a feeling Apple got a little bit more. It might get some relief, right? But don't get faked out by this relief. Okay, I think Apple's coming down to about 125, 126 before we see a real rejection. And the reason why is I push out, and I noticed the last time that we had good support down at these levels, because we've already broken through our previous support level, which was here. We already broken to the downside. So we got to go down to the next level about right here. That's the 125, 126 area. So that's why I think we got some more downside. Hopefully we get a little bit of relief, come out of those calls, and then we start riding puts down, pushing out 2 to 4 weeks. All right, what's the next one? I think it was Microsoft. We'll go ahead and get into Microsoft, MSFT. All right, here we go. Very similar chart. Look, push up on the side. We came here and we talked about this one yesterday. We got rejected here at this level and we pushed down. I got a price target for the next level to the downside, about 235, 233. And again, how you do this? I go out. You got to go out to the weeklies, right? And we went here. We knew that this was our previous support level. We broke through it. So we had this level here of support. We went ahead and met that today. And if we can't bounce from here, we might see a relief tomorrow. But I think that it's a very shallow relief, and we'll probably come back down to our next shelf, which is right here, and we'll come back down to about, like I said, 235, 233, 234, somewhere around there. So we'll be paying attention to that. I'd like to ride puts from getting purchased on high and riding them down so we can make some decent money. All right, next one. Here we go. Adobe. ADBE. All right, Adobe gonna look very similar I guess, yep. Once again, okay, so we got two gaps we got to clear. Adobe already broke through this previous level and we went out again. Like if you guys are noticing a trend, I got to push out into the weeks in order to find levels to go off of. And this was the previous level where we had here, came down and we jumped and we passed it. So now this becomes resistance and we have to go down a little bit further where we see, and I got a little shelf right here. I don't think we'll come all the way quite down here, but we like this shelf right here, right where the moving averages is at. We'll go ahead and call this 320, 321. I think Adobe sees, you know, be in the 325, 320, and I would bet some money on that. So I'm thinking puts, possibly pushing out 2 to 4 weeks on this particular ticker. Now, if we get some strong news or a good catalyst or something like that, then we could potentially reverse. But if we're in this current market and a lot of these things are expensive and a lot of people believe these to be overpriced, then we're probably going to start pushing down to the downside. Just think of Netflix. No one thought Netflix was going to trade below 500 and, you know, things of that nature, right? And look where Netflix is at now. Actually, let's look at Netflix just to give you perspective. 173, guys. Okay. Netflix was a 500, 600. I think it even hit $700 stock there for a little bit right here. Where were we at right here? Look at that, 680, pushing all the way to the top, $700. And look at it now. It's a 173 stock. Okay. Just to give you guys and put that in perspective. All right, next one. Where we at? Where we at? Sorry, we got a lot of tickers in here coming on now. ERX. I've never done ERX. What is this? Oh, this is a bull ETF. Okay. You got to be careful with your leveraged ETFs. Okay, either bull or bear, because they definitely move, and you can make a little bit more money, but you can also lose a little bit more money. So just be cautious with this. Pushing down to the downside, of course, dump, dump, dump. And I'd like to, I'm going to have to research this one because I'd like to see what type of stocks are inside of it. But looks like we pushed down past our previous support levels right here. So we have to go down a little bit to find some support. And we're looking like potentially here, we got a shelf where we touched a couple times. Notice what I'm doing is when I'm looking for support, I'm looking for things that has meat and potatoes, which I call full candles, meat and potatoes. Wicks are okay if that's all you got, but we want meat and potatoes where we've touched multiple times. And I like this level here. So I got 52.23. So 52, 53 bucks for a downward pressure if the market continues to slide down. I think puts are in order for this one. Indicators would indicate as well. Cross to downside MACD, RSI pushing down, SMI pushing down. So I think this is a pretty probability is high that this will continue down lower, 52, 53 bucks. All right. I appreciate you, Robert. Those was it. We already did Apple. Let's do HD. All right, Home Depot, looking like it now. Home Depot is one of those, it's a different type of a beast, okay? So Home Depot is a very, very popular stock. It's one of those dividend stocks. So people love to buy shares of this, but people are gobbling up shares. Now, trading options is another story, but people are gobbling up shares at these lower levels. Don't let the downtrend fool you. People are still paying and buying Home Depot, okay? Because look at this dividend, 1.9 dividend per share, okay? They are crazy with their dividends. So we had the sideways movement. We were in range, right? We had a range here, and then we went ahead and broke this range to the downside. Okay, so previous ranges now are becoming, so we can consider this a supply zone, and we're starting to reach our demand zone. We got to be able to find out our bottom and consolidate though to find our demand zone. Now we got to go out to look to see where our previous levels were, and we have to go out pretty far. But we see this shelf over here, right about here. So we're looking at about 265. 273 right now, 265. I would bet on it, 267 somewhere there. So we got about between a $5 and $8 movement to the downside if the markets continue to stay bearish like they look like they will be. So, all right, what's next? What's next? Disney. Now, you guys don't know about Disney. I'm loving Disney. Okay, I'm buying shares of Disney. Disney's one of my favorite stocks to purchase, and I'm owning shares of it. Now, they got rid of their dividend, which sucks for Disney, but I'm adding to my shares because I'm a Disney fan and I'm a Disney lover. And whenever you buy into stocks that you want to have positions in, I'm a big believer on buying stuff that you enjoy, that you love, and you can see a future. And at this price, I see nowhere but up long-term in Disney because it is beat up and it is cheap, guys. So Disney, looking on the daily, we closed green, but closed further down than we did previously. Let's go ahead and look in the 5 minutes and see how we did on the day. So sideways moving on a day. This was in a decent range. So we can kind of consider this as consolidation. So I think Disney potentially has found a floor. I think Disney potentially has found a floor. Only time will tell, but I think we potentially found a floor, and it will probably start to look to reject from these lower levels to start clearing this gap up here at about 98 to 100 bucks. So I do like Disney going long. As we came down here, I think this is too, enough's enough, basically, is what investors are thinking. And Disney's going to start slowly consolidating out and tricking back up towards to clear this gap here. All right, next one. Where we at? Where we at? NVDA. All right, NVDA. we've been teetering this line. Okay, I put this line here a few days ago. Okay, we got this line that we've been teetering, right? Think of this as the battle zone. Okay, this is the front line. This is where the battle's happening. All right, now we have to hold this line. You hear the thing of hold the line? We got to hold the line right here. Otherwise, if we drop and close below this, we're going to start tricking to the downside. And then when we look to the downside, we got to go out pretty far with NVDA, and we notice we got some bottom downside right about here. We'll go ahead where the cross happens on the moving averages, and we're looking at like 134, 135, somewhere like that. So hold this line, we'll be just fine, and we can potentially come back up, but it doesn't look good. You know, these are one of those tech stocks. A lot of people are pulling out of these just because of the supply and demand issues that are going on globally. So expect some more downside on this one. Indicators would indicate that as well. You got your MACD tricking down, you got your RSI tricking down, and your SMI is tight, but it's starting to peel off to the downside. So indicators would indicate a bearish stance on this as well. All right, what's next? What's next? Where are we going? Hey, I appreciate you guys putting so many tickers in here. Yesterday was like pulling teeth to get people to do tickers. Oxy. All right, guys, so these energy trades, right? Here's the thing with the energy trades. Energy is cooling down. Energy is not going anywhere. In fact, probably experts do believe that the price per barrel is going to continue to go up. But right now, it's kind of in limbo because people are waiting on the decision from the federal government and how this thing with Russia and Ukraine and all that stuff. So we're in a little bit of a downward trend because these oil stocks have just absolutely been killing it. I mean, look at the chart here recently. Okay, let's trick out a little bit. This is crazy, okay, because coming here, consolidating hard, and then we just been taking off. Boom, 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 boom. We can look at XOM too. XOM is a great example as well. Look at this. Bam, 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 right? Okay, so we know that energy's been hot, okay, and we're cooling down a little bit, but don't let it fool you, okay? We're cooling down and we're gonna find our stance. I got a feeling we're probably gonna find our stance on this particular ticker around this area because we're at the shelf. I wouldn't be surprised if maybe we have a little bit of resurgence tomorrow, but next week we have a push on the energy sector because the energy and renewable energies have been beat up here pretty good. So I got a feeling we're cooling off just a little bit, and then we're going to be looking to reverse potentially and eventually making new highs. That's my opinion though, so take it for what it is, but I do think these are safe bets if you push out far enough. But you got to pay for it, and we just looked at XOM, Oracle, ORCL. Oracle, okay. Oracle was odd, was an odd trading. It gapped up, and we saw that, then it closed lower and then lower, and now we're coming back down. Oracle, I do think that we're going to come back down and we're going to test this gap period. 67, 60, 65. I think this is safe to go ahead and put into puts. This one was one of those that we talked about. Typically after its earnings and its dividends, it likes to scoot down. So we got a little bit of space before their dividends are released. We look at earnings here. Earnings were 310. Dividends were 47. Earnings here 613. So we probably got into July before the dividends come, and it will see a resurgence. So before that, we'll come down, we'll test this area at least, probably even spike down to the bottom part of the gap to clear it, and then we might see the push back up for the run into the dividends portion of this particular ticker. All right, what's next? What's next? What's next? AMD. AMD is going to look very similar to NVDA, and it's about the same story, guys. Still tricking here. Now with AMD, this was our line, and we actually closed below this line. So I'm expecting a little bit of rejection from here because it's extremely popular. We'll probably push back up. I wouldn't be surprised if we clear above here, maybe even having a big resurgence pushing to 85, maybe even 88 to cover up here. But I do think that we continue down to the downside. And if we look out, we look at our next level, shelf would be right here. Now, I don't think we come all the way down to 52s, but we could definitely come down to the bottom portion of this last consolidation zone, 75, 73, something like that. 75, I think, would be safe to say for a test at the bottom levels where we'll probably find a lot of support and probably reject those lower levels and start tricking to the upside. All right, next, where are we at? We already did Tesla, Sony. All right, let's look at Sony. Sony's moving similar pattern to the other ones. It gapped down. It actually got two gaps. So we gapped down, actually a couple of gaps. So gap down here, gap down gap down. Once this reverses though, probably see a little bit of resurgence here. Probably a little rejection, at least to test the rejection area. It looks like it may have dividends coming up. It looks like 27 cents per share. So, you know, we got a floor here, 80 bucks. It's at 81, about $1, $2 movement to the downside. Probably see some resistance and a little bit of a push to the upside. This will trend with the overall market. If the market trends heavy to the upside, this will trend to the upside. Indicators are looking pretty bearish. We got the cross pushing down, RSI pushing down, SMI pushing down. So we do still look very bearish, but I think we come down. Previous floor right here becomes support, 79, something like that. We got a $2 movement to the downside, reject, push to the upside, maybe even try to test this gap over a period of time. All right, next one, HMC. What is HMC? Honda Motor. Okay. Now, Honda Motor was interesting. I read a story about them the other day. They're talking about a specific thing with electric vehicles. So this does have some interesting catalyst forward thinking on this one. It's trading kind of sideways, not as dramatic as some of the other ones. And we're actually not too far off of our moving averages. Still bearish on this one. Still coming down, but it looks like this one may have more potential and to rebound a little bit. We're still on the downside of this, so this is not a good sign for moving in tomorrow, but it looks like it moves with the market. So when the market trends, it likes to trend. So paying attention to these, if SPY's pushing to the upside and the big tickers are moving, Tesla, Amazon, Apple, the ones that carry the market cap space, if it's pushing, this will probably push to the upside, but just be careful of the reversal because we do got some downside here, 24. Look, but not too much downside. So, you know, 24.31 looks like we're pretty good keeping in this range here. So I don't think we have much downside on this. And this may actually be a good candidate for going shares and getting a position long. Does it have dividends? It has a dividend. Look at that. Look at that, 50 cents per share, guys. This is a fantastic price over here for this particular stock. Go long in positions. That would be highly recommended. All right, where are we at? Roku. All right, Roku. I like Roku. Roku, kind of some sideways movement. We got a shelf down here, probably coming down to track the downside. Now we got, Roku's interesting. Okay, let's look at this. Let's unpackage this a little bit. We got an inside bar. Okay, so inside bars are great. I'm going to teach you guys something if you don't know. We can create trigger points for this. So here's our outside bar, right? Called a mother bar. Here's our inside bar. Inside bar, we fully from wick to wick with our full meat and potatoes of trading, we cleared and closed inside of the previous day's bar, right? So we're going to put some lines on here. So we're going to come up to the very tippy tip of the wick. We're going to go ahead and put a line there. And that's a 84.62. And then we're going to go down to the very bottom right here where we had a flat bottom, no wicking at the bottom. We're going to come here and put a line, right? So something like 74.63. So next day trading, what we do is we start making trigger points. Okay, if we close on a 5-minute chart, 15-minute would be best, but at least a 5-minute chart above 85.12, we go with calls on this particular one. That'd be a trigger for calls. If we close on a 5-minute chart, 15-minute would be best. Below 74.13, we go with puts. Anything in between, we're not really paying attention to it unless we're scalping. All right, so that's how you play the trigger points. Definitely interested in that one. I'm going to look at this and probably play this one tomorrow, see how it does. Appreciate you for putting that one on here. That's a good one. You know, inside bars are great to trade. Matthew, appreciate you putting that there. Cisco. All right, how are we looking on Cisco? Let's look at the day. It's actually not looking too bad. Kind of got the snake pattern thing going here. You know, I don't think we got a little bit of some sentiment. Indicators would indicate we're getting tight. So I don't see any indicator of continued downward trend. I think this trend's kind of with the market. If the market's trending heavy to the downside, I think this kind of follows as well. And if the market's trending to the upside, we'll probably see a push. Push to the upside could be 43.93, where we're at 43.92. So 44 bucks to the upside. If we push heavy to the downside, we could see probably 41, 42 bucks. Okay, so definitely paying attention to that. But Cisco looks at least appealing for potential trigger points going both ways. All right, I like that one. All right, where we at? We already did Tesla. Shop. All right, Shopify. Shopify is one of those that is an expensive stock. A lot of people believe this to be inflated. So we're paying attention to this. We're down here at the bottom on the shelf. Indicators not giving us clear indication of the downside, but we look like we're about to cross the downside on the MACD. RSI is pushing down. We already got the cross on the SMI. And when we look out to the weekly, we notice that our previous low where we're at this previous low here. And looking like it doesn't like this level. So anything below this, we'd have to go further out, and we'd be looking like at these levels here. So potentially 2268.51, something like that. So this would be interesting to watch. It's a consolidating tight. Look at this downward trend here. We start consolidating tight, a little trickling to the downside. I'd be paying attention to this pretty carefully. I don't know how to trade this right now. I'd like to see more of an indicator to the downside. I'd like to see a bigger one of these, something like this. I'd like to see one of these to the upside or one of these to the downside. But if we start trending close back to our moving average, we could start thinking long on shop. All right, where are we at? IWM. Trading the Russell, I like it. Okay, so we got our downward trend, boom, gap down, boom, gap down hard again towards the bottom. I think we continue to go down on this particular one. This ETF indicators would say so as well. RSI pushing down. We got a cross on the SMI, and the MACD starting to spread, which shows us the volatility and the momentum to the downside. Also, we're below our moving averages. Yeah, this one I like going towards the downside. Oh, that's on the weekly. Hang on, let's look at it on the daily. Sorry about that. Yeah, and the same thing on the daily. We got our spread coming here, pushing to the downside. Yeah, so I like this for continuation to the downside. And we have to go out pretty far to see where our next bottom is. So here, looks like we got a shelf. Oh, look at this. So we're clearing this gap previously here, and we're about a 161.24. Where we close at today? 163, about a 2-hour movement to the downside before we start to see that support. All right, where are we at? TQQ. All right, TQQ. This is going to trend with the SPY and with the Qs. Okay, so if the SPYs are trending down, this is going to trend down. If the Qs trending down, this is going to trend down. If they're trending out, this is going to trend up. So we're definitely paying attention to those. These are one of those ProShares Ultra Pro. So it's an elevated ETF that's playing off of the Q. So definitely paying attention to it, and we'll see how this goes. But if we're watching this, we got to be watching on the same time the SPY and the regular Qs as well. Okay. All right, SOXL. Sorry, my dog's going nuts. All right, SOXL. So this is semiconductor bull fund, and we are losing money. And it looks like now, guys, this is going to trend with our semiconductors. If the semiconductors doing good like yesterday, right? This thing's going to be doing good. If it's not doing good, it's going to come down. So we're definitely looking. This will pay heavily. If SPY's doing good, you can rest assured that probably if your NVDA, your MU, your AMD, your TSM, if those are doing good, this is going to be doing good, and you can start going calls on this one because this is the bull side of it. But if they're not doing good, you want to go puts on it. And to answer your question, will Tesla continue to go down? We looked at Tesla before. Look at it again. Why not? You know what I'm saying? Looking on daily, it looks like we got some more downside on Tesla. I think that we're going to see 620s in Tesla, to be honest with you. Charts would confirm that as well. We got almost across on the MACD, RSI pushing down. And the thing here, the kicker here with RSI is we're pointing down, and we got room to continue to the downside. Okay, we're not oversold yet on this. So this definitely has potential to the downside. SMI already crossed to the downside. I'm bearish on Tesla. Short term, I do like this long as a position, but I definitely think we come down, 620s, maybe even 615s if we start to get a cascading effect from selling. All right, AVGO. talked about this one yesterday. Hey, and look what it did. Okay, we talked about this one yesterday. We said based on how it closed yesterday, we kind of had this odd wedge where we had our top here, and it looked like we were going to make a decision. And if the market was strong, it would push, and if the market was weak, it'd come down. And it did exactly what we thought it would do. The market was weak, and it came down. I didn't think it was going to come down that far, but it definitely made an impact. Let's look out on the week, see what a good level at the bottom is. So we're basically at a level where we had some previous consolidation here. So I would think that if we had a strong market, the likelihood of this one to reverse would be high, and we could probably see a pretty decent trade, because on the day, if you look at it, on the day, we traded from here, 514 to 593. So we probably could get about 50% of that back on a strong trading day tomorrow with some wicked spiking to the upside. So paying attention to the market. If the market is a bull market, this will trend to the upside. If it's bear, we probably can go with puts, and it'll probably trick down about the same amount, if not maybe a little bit more, for some cascading effect. All right. Coin. Yeah, man. What's people think about crypto? Dang, crypto has been getting just hammered, and coin is no different. Okay, so if crypto's being hammered, coin's going to get hammered, guys. It's closing tight. I do think we got to move with crypto eventually. I think it's getting to the point of, especially the big coins, the legit coins, starting to get in a point where people are getting interested again from the selling off. Okay, so I do think we'll probably see a little spike in crypto, and it'll be something that people start getting interested in again, and we'll see the fruits of the labor from that going with coin. But listen, I think coin right now at this price for the ETF, I think it's a fantastic price to go ahead and get positions long and just hold for a while, see what happens with it. Definitely could easily, 2x, maybe even 3x your investment in this particular thing if crypto reverses strong and pops eventually. All right, ITB or Amazon, if you haven't, yeah, we get Amazon. All right, Amazon, tricking to the downside. We have this level. Here's our floor, 101. It's a psychological thing. So $100 is psychological for Amazon. Okay, that's our floor. That's our fighting zone. That's where Amazon's going to test and reject. So if we start to trick to the downside, 103.66, we start to come down. If we get into those $100 areas, maybe even 99, that's an area where you probably should be clicking in your brain. Potential reversal, go long 2 to 4 weeks out, stay at the money, in the money as much as possible. But at these prices, guys, this is buying shares all day on Amazon and hold for a long time. Whoever thought they'd be able to buy Amazon shares at $100 a pop? Okay, so definitely go long on Amazon, in my opinion. Shares are fantastic. ITB. I've never done this one. I don't know. Construction ETF. Construction's tough market. Okay, it has a dividend of 10 cents per share, but construction's tough market. Until we start to see things happening. Look, this is low. I don't see it. It's actually lower than it's ever been. I don't see a bottom. I think it's a falling knife, to be honest with you. I can't even give you TA on this one when we potentially see a reversal. So be cautious with this one. This could be a definite continued downward pressure, and by the indicators, it's just a stream to the downside. Be real cautious with this. All right, Roblox, Rblx. All right, here we go. Rblx, looking, we had this level here. This was our line, and we actually closed below it. So we're thinking further continuation to the downside. That was our line that we put in yesterday, right here with our shelf, and we closed to the downside. You can see that we're here, right here. 24.74. If we have a strong market though, like a little relief rally, Roblox will see the fruits of that labor. But again, with this one, since we already closed below this, don't get tripped out on that one and think that this isn't immune to it. They have a lot of issues with their overseas payment, okay, because Robux is a huge money marketing thing for them, and they have to convert that currency into US dollars because they're a US based company, right? And with the US dollar gaining strength on the global economy, that costs them, that takes away from their profits from, you know, Chinese money or India money or, you know, Japanese money, anything like that. So we just have to pay attention. I was reading a whole story about how it costs them money because of the strong dollar. And I thought that was ridiculous. I was like, we want a strong dollar, don't we? But apparently when you're international and you use other foreign currencies, you don't. So we're definitely paying attention to it though. All right, Upstart. All right, we're going to do Upstart, Ford, and then BA, and then we're going to close it out, guys. So Upstart, here we go. I still see some downward trending on Upstart. RSI, we have room to continue the downside before we're oversold. SMI is already crossing, still a steady stream. This is a slow trickling to the downside, though. I don't think it'll be dramatic. I think it goes down. I wouldn't really think about trading options on this one particularly right now because I think it's going to move in just little increments. Okay, as you can see here on the day, 34.56 to about 30.87. I guess there's a little bit of movement in the price. I guess you can make some money decently, but it's also highly suspect. It's going to move trickle down effect. Let's see how it did on the 5-minute. You know, I'm starting to rethink what I just said. This could be a potential good day trading one. Okay, I would not want to swing this, but day trading Upstart could definitely make some money. It seems as though it trades pretty well on the moving averages. If you see the 9 cross over to 21, you could think puts, write it down until it starts to reach back up, and then you can start to go long. So definitely paying attention to this one. I like this for day trading, looking at the chart more, but I don't follow this chart very much, so I don't know how to trade it. However, I will be looking at it tomorrow. And if I see an opportunity to make some money, I'm going to go into it. I like this one for day trading for sure. You made money on, hey, I appreciate you, Jared. You had AVGO put? Yep, money. Appreciate that. All right, BA and then Meta. I got you, Abena. I'm sorry if I jacked your name up. Boeing. All right, where are we at? Boeing's actually one that I like pushing to the upside. I think we come up and test this this shelf here, okay? I think a Boeing is low and enough's enough with it. And I think we're seeing some upside. I actually think we come up about 138, 140 maybe if I'm being, you know, aggressive, but 138 could definitely do it. We closed above our moving average, which is momentum to the upside. I think we come up here to test the meat and potato consolidation period here, which would push us at about 140. I like this for calls to the upside. Definitely paying attention to this one at the market bell. Catching some bell volatility for a day trade would be fantastic if it pushes hard to the up. Meta, look like we got more downward trending, guys. And at these prices, I'm still a big fan of starting to get positions long in Meta or Facebook, whatever you want to call it. It's not going anywhere. The price is getting cheaper, which is fantastic, but establishing a position, you know, getting, you know, 5 or 10 shares in this one would be beneficial in my opinion over long haul, and then dollar cost averaging on any type of weakness and dips. But it does look like we're continuing to go to the downside, so you probably can get a better deal. And again, this one holds a lot of market cap. So if the market's trending like on this day, like it was, look at this. Look at SPY, right? SPY green, right? QQQ green. Meta green, okay? SPY and Q, if they're trending, you can look at Facebook and it's probably trending as well, okay? So just paying attention to that. If SPY is dumping, Facebook's gonna dump. If SPY is jumping, Facebook's gonna jump. So paying attention to that will keep you in the clear on your trading direction. Follow the big money. Ford, and that's it. All right, here we go. Ford, looks like they're losing some money, guys. Ford is they had some news, and I can't remember the news right now. Hang on, let me pull this up real fast. They had some news. Dividend. Oh, they had a bunch of recalls, and they also had some news that they were talking about because of the global economy. It was impossible for them to make profit on a certain aspect of their industrial positions with car manufacturing. So whenever a big business comes in and says, look, if we do this, we can't make profit, people aren't going to invest in them. Okay. So they're going to come down a little bit until the global economy gets better. And that way people can make money off this particular stock. So we do got some downside. Remember, a couple years ago, Ford was a $4 or $5 stock. Okay. So it's definitely moved very dramatically in a short period of time. And it's headed down. All the indicators would say we're going down. Probably be safe to say that Ford could potentially even touch $10 within the matter of a month. All right, guys. Hey, I appreciate you guys coming along with us. Hey, listen, come check us out at Traders War Room, okay? We do this stuff all the time. We love to train. We love to teach. We love to hang out. Guys, it's free to join us, to come check us out. And I appreciate you guys coming along with us. Abina, thank you. AK, thank you. Audi, thank you. Brian, thank you. Cynthia, guys. Everybody, thank you. Remember, we're looking at the stock market like a war zone. Stocks and sectors are our battles. We do it together as a team. Attack, conquer, destroy, and we're always going to war. So let's go out there together as a team tomorrow, destroy this market, close it out strong, come back next week, rejuvenized and ready to just absolutely kill it, guys. You have a great night and have a great evening, and I'll see you guys tomorrow morning when the bell rings, and we'll go make some money.